Morning, everyone. I hope everyone is having a fantastic day. Today, we won't be doing an analysis on Bitcoin. You think I've shared enough info in the last two videos, which so far has been respected quite well. We know where we're looking at, to the upside or to the downside, whichever comes first. Okay. Today, I want to talk about ranges, how I trade ranges, how I scalp. I believe you members in the group that don't really understand it, they probably have questions to themselves. $300 move, is it even worth it? How can you get money out of it? Isn't it not too stressful? A lot of questions. First of all, I want to start the video about risk management. By the way, I remember we only trade paper money. Okay. NFA, do your own research. For example, we have a $1,000 account. Each day or each time you have a trade open, you are willing to lose 1% of your overall portfolio. So how can we find our trading amount based on that risk? What I do is I take the risk amount, which is 1% of the total account, in this case, $10, divided by the stop loss that I take per trade. Okay, this is how long am I willing to hold my position until getting invalidation, 4%. So divided by 4% times 100. Long story short, 10 divided by 4 times 100, $250. That will be my margin. Okay, for example, if you use 10x, in this case, it will be you're willing to lose 4% and you're getting a reward of 3 to 3, which is about a $300 move. And so that should be your scalp. So then you adapt it according to your risk management, of course. I hope that helps. If it's not clear, feel free to ask me questions in the Telegram group and I'll be more than happy to help you guys. So good to know the risk management. It's a good first step, but now we need to know how to actually apply it. So I will show you that thing that I share in the group yesterday. For me, it was clear and obvious. It's around here, a crazy Darth Vader candle. I call them Darth Vader because they look like the sword, you know, where you go left and right. But these are perfect because they clearly give you invalidation of the high and invalidation of the low. You cannot ask for much more. So when I see this, I will take my fib and I use a 0.25 fib. Okay, so this level will be 1, 0.75, 0.5, 0.25, 0. Okay, and then I will just put this on this candle and I'll zoom in. Here's my range. Okay, so this is the middle of the range. It's a no trade zone. Okay, when we trade, we want to have the most probability on our side. We have this swing low and this swing high. Beautiful. We already know exactly where our range is formed. If you short here, it's definitely not because of the range. It's because we had different confluences that were coming in. Also to pay attention always when you trade a range. So of course, pay in consideration the other support and resistance that you have. So this is how I want to explain it. Where we look for longs is between this area and this area. When we look for short is between this area and this area. Here, the middle is no trade zone for me. How did I do it yesterday? So then I'm going to go into smaller time frames so we can understand slightly better. So this is going to be really nice because I'm also going to go into details with order block, which are extremely useful. So yesterday, so we have this order block right here. So this is definitely a place where you know there's liquidity to grab if they want to go higher. So you don't take this short except if you had other confluence outside of this range, because yet we don't know that this range is about to form. Okay. However, after the second hit right here, you could have anticipated, but it's a bit harder in my opinion if you don't really know and if you don't follow order flow. But so we have order block here. We come back, grab the liquidity, coming into our zones where we interesting in longing, which is the low of the range. We sweep the liquidity grab and flip the market structure pump. How do you work that? So you know you have an order block that's looking interesting, first confluence. Then you also in the zone of the range that now you're looking for longs, okay? You don't look for shorts here anymore. It's too late. The short was up here. Now you look for longs. You take your long setup. And for this, guys, it's literally no loss because we react. So we enter on the wick. And so then our stop loss, the invalidation is simple. It's just if it comes back to take the wick, we get stop out of a trade. So we enter here. How you want to trade that? Logically, back to the top of the range, correct? So now you're telling me, okay, wow, a 25 risk reward. That's why I don't understand when people are telling me scalping it's not profitable. Man, where can you have such amazing trades? Even swings, man, you can turn a scalp into a swing if you put the right amount of money and you have a really nice risk management. You'll be really surprised, man. So we come back in. Then what's our next target? Simple. Our take profit one is here. Okay, middle of the range. You're going to ask me, do we want to flip short here? No reason, okay? This is 50% chance. If you take a trade at this line, you are gambling your money. Our TP2 is here and our final take profit 3 is here. Then we close the trade fully, okay? This is the plan. We not think, oh, it's going to break, patati, patata. No. What if like you don't close it? Yes, you take profit 1, 2, 3, but then it comes back to your entry. All that profit you could have secured up here is now lost and you give it back to the market. Okay, then back to the reaction. We come back to the high of the range, guys. Guys, isn't that perfect? This is the 1 minute time frame to tell you how perfect the levels are respected. Come back, boom, take this high, swing failure pattern, high of the range. We know that now this is a range. Clearly, where do we look for shorts? High of the range. I see this reaction. For me, this is a direct short. I don't ask myself 2 questions. Okay. And I shared it in the group yesterday. So I said, pretty sure most gets right. The power of trading the range. TP1 done. SL move to entry. Okay. So in this case, what will be our stop loss? Top of the week. Okay. Then our target this time, low of the range. Simple. Where are we now? Almost to the low of the range. So you should have take profit 1, take profit 2, take profit 3, maybe take profit 4 and fully close. Okay, today, different example. I'm a bit stubborn. I know I'm telling you stuff to not take a trade here, but this morning I did. I'm a scalp trader, guys, okay? So you need to understand that's my job. So at the end of the day, it's my business. I need to make it run and I need to make money on a daily basis. I cannot just wait and be patient for my swing trades, right? So that's why I did take the short here. And I will explain shortly why did I take this short, even if I told you that the middle line is no good short. So we fall through this middle line. And this is where I will use the order flow and I will show you exo chart. We come back to retest the line 1 time. Okay. Into the VWAP, reject, but the rejection is still giving us a higher low from here, which will make sense. We take that low, that means we take the liquidity, but it will make sense to do the same, at least for this week right here. As there's a lot of liquidity, there's some shorts here. The price still doing a higher low, come back, higher low again, go into the VWAP, into the middle of a range. And what do we see right after that? From the call that I give exactly on the group, a 1.3% move. Guys, this is huge. Like the power of a range, I hope you understand, because this is further than all your EMAs and everything. Like it could have clearly do something like this, right? Like without a doubt. But how did I know it was not going to do that? Well, this is where we come to exo chart. I will stay on the 5 minute, right? So I told you guys, this is the VWAP right here. Let's put it on our thing. So first reject of the VWAP, okay? As I mentioned, we reject the first time, but we still remain in a higher low. Let's zoom in a bit so we can see what's the volume doing. And the CVD, of course, because the CVD is what gave me my actual trade, to be honest. And the amount of loans that I was seeing opening here, like, why? It doesn't make any sense. You're into resistance and into the middle of the range. Also, yesterday's point of control. Why would you long here? It doesn't make any sense. And as I said in the group, for me, here is no long, as clear as this. And then what do we see? Come back into the VWAP with the CVD being extremely bearish while the price is doing a lower high and the CVD constantly making higher highs. Big shorts opening, clearly absorbing all these small fishes, all the small guys that are trying to long here. A bigger guy was definitely absorbing them. And once trapped enough, results into punishing them. And here we are back to yesterday's value area low. Okay. So that's why I say order flow, guys, extremely useful. So overall, I hope that helped. Amazing range. Overall, in this range, we have had 3 successful trades. Don't get too caught up. You know where we are here. Okay. We could see a bounce. This is the zone where we look for longs, okay? No shorts here. Here is too late to short, guys, until the range breaks. And then we're happy, we make free money. I hope that helps. I hope it was not too long. I hope I made it quite simple. It was my first time trying to teach. Bye-bye and happy trading.